Hey everyone, welcome to the Monday Market Update. Don't have Sean with me. I got special guest Rob Peeklow, VP of Revenue here at UMortgage. Sean's en route to Philly, so I'll get to see him in person, which I was lucky enough to see Rob in person last week here in Philly as well. So thanks for hopping on, Rob, and let's get these people updated on the market.
Whew, we had a eventful weekend. I mean, like a Russian coup. We had some discussions regarding inflation and rate increases across the globe. So it was a pretty busy weekend actually. This morning we were like so green. It was all green. I thought we were going to have a pretty stellar open, and that looked to kind of just go away over the last like 10 minutes. So what's going on
Yeah,
out there in the markets today, Austin?
yeah. I mean, it doesn't seem like there's too much. Any huge data piece other than like the Dallas Fed Manufacturing Index, which doesn't really move markets at all. Um, but I think a little bit of digestion of kind of all of what you talked about, right? Like there's a lot of pent up uneasiness, I guess, in terms of what the Fed rhetoric has been, and just all the international, central banks that are fighting inflation, kind of at whatever cost, right? So everyone's getting a little bit more bearish on the sense of, hey, there's going to be probably one or two more hikes. There's also the fact that we might have a less chance of a soft landing in not only our economy but maybe other economies across the globe. So it's one global economy in some senses. So wherever the other people are doing, we kind of have to listen a little bit in our market. At least our bond market especially listens to it. Maybe the stock market not so much, but it is what it is.
I think this week's going to be all Fed speak. It's going to be the tone, and I think there's a couple meetings. I think there's some things happening on Wednesday with our buddy Jerome, and see
Mm-hmm.
how that plays out. But it's going to be kind of the same thing. We've been posting in this range. We have this upper range that we've been in, and it seems like every time we go near testing one end of the range, we tend to bounce back towards the other, and we're on the lower end of that range right now. We were, like I said, below it this morning, but it seems to have bounced up pretty hard off that number, and it looks like we're kind of back in line with the range. So we'll see how that pans out the rest of the week. He said there's aren't a ton of data points that are going to be coming out this week that would affect markets, but so it could be one of these less important um, data points would potentially move it just because there's not a lot of other things happening.
No question. I think really, if we're gonna harp on any data point, we have, which is good. We have some case shiller stuff coming out tomorrow, which I think is always good. We work in the world of housing, and it's good to kind of see what case shiller prints. But initial jobless claims is going to be something you pay attention to. But we also have some PCE stuff coming in on Friday, I believe, which will be a good precursor to getting jobs report next week on after July 4th. A weird week again with big data, having a market holiday smack dab pretty much in the middle of the week, and then we have kind of the headline banner data number that gets posted outside like CPI or PCE, of course. So very much, I think a little bit of antsiness, and like you said, Fed speak is probably going to be the data point, and it's all qualitative, not quantitative data. So we're going to have to listen in and see what Jerome Powell has to say.
Yeah, I'm excited to see kind of where the FHFA housing numbers come. I know Case Shiller comes out, and then FHFA comes out with their HPI indexes the year over year, and then month over month for April. So I'm excited to see what that looks like, just because it with these housing appreciation kind of numbers that come out, it's kind of another good data point and talking point for originators to kind of keep continuing to talk about the message of like why waiting doesn't work. If this index, which I anticipate being up a little bit month over month, and then up a little bit obviously up a significant amount year over year, it just goes to show that it's waiting wasn't the right play a month ago. It wasn't the right play a year ago. It wasn't the right play 2 years ago, and that'll continue. That is going to continue to come out for us. Now, I did want to mention one thing. We're racing to a big number here at UMortgage, and who's it going to be? We're super excited that we're going to be funding most likely our billionth dollar of 2023 sometime this week, right? We're very close, aren't we, Austin?
Oh yeah, we're really really close, and I think it's going to be a surprise if we don't hit it this week. I think in general. So we're excited to see. That's definitely something more exciting to pay attention to than Jerome Powell. I'm excited, and it's obviously a huge number for us. I mean, being able to hit that billion, right before our Q2 end, essentially, it's just a huge like banner thing to be able to accomplish. We did not hit that number last year. We were sort of close, but this is just a testament to the hard work that everyone's put in here at UMortgage and the growth that we've experienced, and more of what's to come. So it's really, really exciting, and yeah, it's gonna be awesome to see who that person is that does that billionth funding essentially. So
yeah, now the odds are in the favor of those with the higher loan amounts. There's some guys that close a lot of loans that might be smaller, but there's some guys that close those big loan amounts. So we'll see who it's going to be. And for sure, last year, I know we surpassed. I think last week we surpassed last year's volume number for the year, and then this week we'll get to that $1 billion of 2023, and well on our way to have a really good run rate in the multiple billions, and hopefully get to that number of $1 billion every month. That's the goal here. So outside of that, Austin, anything else that's moving and shaking in the market that we should be talking about today?
I don't have anything else on top of that. I think it's just pay attention to like you always say in your market minutes, pay attention to the rate stack. That goes for every day. Just copy and paste that message. It's so true though, at the end of the day. And look, markets may be volatile, like it, lock it. You don't know what Jerome Powell's going to say. We're bouncing in this range. There's not going to be too much volatility outside this range, so there's not going to be a huge amount of I think you're not going to have FOMO of locking one day to float. You wish you floated. I don't think that's going to be many cases in the future. So make sure to not gamble necessarily, but we hopefully don't have too volatile of a week, and you don't have to worry about that stuff too much.
Exactly right. Always make sure you lock it. It's always easier to ask for what we can do on a loan that's already been locked than to ask for the old time machine to go back in time and lock it. It's a one-way street, unfortunately, for those. So yeah, definitely on that point, and open up the rate stacks. We talk about it all the time. Everyone's tired of me saying it, but then we still get the lock request, and we have to push them back and say, hey guys, just go down a quarter, go down an eighth. It's a better deal for the borrower. That recoupment period. Some of them we're seeing like less than a year for the recoupment to drop down in interest rates. So definitely pay attention to it, and go all the way down the stack too. A lot of times we'll see, especially on those quarters in government, it's really important to take a look at that, because you'll see 6 1/4 and 6 1/8 and then 6 and then 5 875, then not realize that 575 is paying almost the same as 6 1/4, or say vice versa with 675 and 6 1/4. So those are the kind of sweet spots right now we want to pay attention to. I'm looking at my screens right now, Austin. It's like kind of blah. I feel like everything is just going to be a blah day today. It's probably going to open probably flat, if not a tiny bit down, but nothing too crazy. I'm staring at the 5.5 right now, and just seeing that it's going to be between 2 and 5 basis points. Looks like potentially down for the morning. So I don't think that's going to affect rates too much as we go through, since Friday usually they like to add a little margin on Fridays for a long weekend.
No question. I was thinking the same thing. Just who padded what and what gets passed through. I think it's going to be fairly flat. Just from a general standpoint, no question about it, Rob. I completely agree. So, we'll see what we got when rates get released, and we'll go from there. So, if anyone has any questions, obviously, you know where to reach out. We're happy to chat about anything that you guys have questions on, and we really appreciate you tuning in for another Monday market update. We'll have Rob doing your daily market update starting tomorrow. So, thank you so much, guys.
Awesome. Thank you.